wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello everyone. If you can hear my voice, please put a like or just put in the comment section, yes button. And today, welcome back to our M Plus Online Wiz Pro highlights, weekly updates. Okay, so this round it's me, Louis Lau, that will go through the stocks with you, and we'll go through the market with you. So I believe that today is not a very great day. I think after the end of October, we are into a doldrums of market sell down, and we have seen a lot of the trading activities not as strong as before. And I think a lot of people are worried about the Cukai Makmur and also the stamp duty changes in share trading. So perhaps that has contributed to this the slowdown in the market activities. But also, we have the Omicron, variant, COVID-19 Omicron variant that has hit the global scene, and it is more infectious. So that is why people are claiming that Omicron could also dampen the economy further. And once we have this Omicron, we have supply disruption, we have slowdown in economy, we have inflation. So inflation phase, what people are talking about is right now the Fed's FOMC meeting that will be coming in December. That might also change the dynamics of people trading technology stocks versus value stocks. Why do I say so? It's because if the Feds is changing the tone from dovish to hawkish, and if they want to increase the interest rate higher, that will also dampen the stock market by people selling off the market. So increase in interest rate short-term wise is also telling us that it is negative for the market. But long-term wise, it is telling us that they see that the growth is coming back, and therefore they want to increase interest rate. So Omicron is really a double-edged sword that contribute to all these factors, because Omicron, if it is worse, if it contributes to worse than expected situation, it will also dampen the economic recovery, and dampening the economic recovery will also mean the supply chain disruption. And if that is the case, people are still paying for higher price goods, and therefore they need to increase interest rate. If, okay, this is the first scenario. If the second scenario comes in like this, Omicron is much better. It's not as worse as Delta. It's not as worse as the first COVID-19 virus, and economic recovers. Then you also need to see, inflation will comes in again, and the Federal Reserve has to increase interest rates. So either way, both ways, the Federal Reserve is in a very tricky situation. They need to increase the rates as well. So in order to, we assume that market participants are saying the increase in interest rate hike going forward, and the quicker tapering process, it might contribute to the sell down. So people are already selling down, and therefore moving forward, we are supposed to see some negative sentiment for technology counters and moving over to value or fundamental solid companies going forward. So there is a shift in things. So if you notice, Dow Jones is not as bad as the Nasdaq, okay, because Nasdaq has been collapsing, but Dow Jones is still able to maintain the movements of the daily movements overall. Okay, so at least you can see that there's a shift in people selling off quickly on technology stocks, but they're moving over to value stocks. Okay, so that could be a similar case in Malaysia as well. So if you notice what happened here in in Malaysia, we can see that technology stocks is down 2%. Okay, it's one of the greater fall compared to the rest, except for healthcare. Healthcare, we know what is the reason, because Omicron was in a few weeks, I think few weeks back, 2 weeks back. So there was a news to jack up the healthcare sector overall. So right now, people are saying the easing fear. So people might be offloading glove companies. So if you notice this, glove stocks like Top Glove, Hata, Sumax, everything is down. Okay, so basically people are pricing in not as huge, not as high demand as in 2020, 2021 kind of gloves. So ASP has started to fall, and we are expecting the healthcare sector to offload even further if Omicron is not as high mortality rate compared to COVID-19. So last week we did mention about um, if Omicron is worse than expected, which is if it contributes to higher mortality rate, higher hospitalization rate, then gloves will have more play. But if not, then gloves will continue to stay within a consolidation range. Okay, so that is about the idea of what we are going to pick for the rest of the year. Okay, so technology stocks, you can see that it's not much of activity because people might be shifting if the interest rate hike is going to come in sooner than expected, and people are already pricing that into the market, and that's why uh, technology stock has been coming down. So technology has been down near to wait, let me check again, 2% for the day. Okay, then the next one is talking about shifting over to heavyweights. So why do I want to monitor for heavyweights is because it will be interesting that this month is the month of December, and normally during month of December, a lot of stocks should window dress higher, okay, especially in KLCI terms. And why do I say so is because over the past 20 years, there are 17 years out of 20 years that the KLCI managed to close higher by at least 1.8% average return per year. And 17 times it's a very, very high success rate. It's near to 80%, 85% of times that the KLCI can close in the greens. So 1.8% is huge within a month. So that's why I see there is a strong reason that heavyweights might be focused in the in month of December. So that is the whole idea right now that we are pinpointing towards the direction of the market. So in summary, the conclusion of the market update right now is technology might be too overvalued if the interest rate is coming in much sooner than expected, and the uh, dovishness of the Feds is shifting over towards more hawkishness, then it might also affect people buying into tech companies. So back to square one, back to fundamentals, will be the play that people might be focusing by 2022. Okay, so that is just a summary of what I'm trying to pinpoint in the market situation in the global stock markets, and why there is a sell down in technology stocks. Okay, so let me share you another screen. Okay, let me share you another screen. We will do the stock pickings right now. Okay, so let's see. First of all, FPM KLCI, where is it right now? Okay, it's not as great. It definitely is not as great because after October, you can see that after the budget, especially, there is a shift of selling pressure. So this is definitely impacted by the policy changes, either the stamp duty changes or the Chukai Makmur tax, and that has contributed to the fall and getting nearer towards, even after the earnings season, people are still not buying into the stocks because they anticipate earnings next year might be a little bit weaker. So that is what I think. I think that is my assumption right now, and people are selling off the shares, still selling off the shares until right now it's near towards 1490. The previous support is located around 1483. Okay, 1483. So if you can see my screen, please put in yes, yes, yes. Okay, so you can also put in 1490. Current support, current range of support is 1490. You can put in 1490. Maybe you can buy 4 digit today. Yeah. Okay. So what has happened over the past week is definitely Omicron, and we are not still not seeing any clear signals yet. I still see some of the news article mentioning about Omicron is more contagious and is contributing to a spike in these cases in South Africa. So that is why last I think 2 weeks ago it has risen strongly, and last week it has risen strongly, and then it pulled back straight away until right now, healthcare is back to square one. So it's not even 2 weeks. Delta lasted 2 weeks. Okay, Delta lasted at least around 2 to 3 weeks, but this actually is a very very small trading range. People are offloading straight after it has hit around 10-20% return in the gloves counters. So let's see what is going on in upcoming few days or few weeks. Let's see what's data showing within 2 weeks, because we only will know if there are cases going into from first stage to second, third, and fourth, and what is the hospitalization rate, what is mortality rate. So that is the whole idea right now, to wait for the data. But market seems like doesn't like the information in the news flow, and therefore they are selling off the glove companies. So other than that, we can see that financial services. Normally, financial services will be a winner during the month of December. So let's see where is it about, and it might rebound higher. So that's why today we have put in CIMB. CIMB is one of the picks because we believe that it is high beta, which means that it follows the KLCI index very closely. So if KLCI is going up, CIMB should be going up as well. Okay, uh, so that's the whole idea in the month of December. At least one of the stocks is actually running right now. So we can foresee that if this December is considered as window dressing period, generally banking stocks should be going up. So where is the resistance that we are looking at? It will be around 5 ring and 41 cents. That is the first resistance. I believe that early on it went up even higher towards 644. But even if you can check during 2016, 2017, what is the monthly monthly upward move during 2016 or 2015? Okay, let's see, 2015 it up by near to 1% only. Then in 2016 it's down -1.3%. In month of December of 2017 it up 8%, so it's quite significant, I would say. And in December in 2018 it's down 0.9%. In December is down 0.6%, and 2020, let's see, it's up 18.5%. Okay, so you can see that quite significant movements during the month of December, just by trading alone 5 years period of CIMB just in December, month of December, you can garner around 18.5% in 1 year, and the rest is very minimal, 1%, 1%, 1%, and this is 8%. So in total, you are getting around 26% out of 26% out of 5 years, or maybe 20% out of 5 years, which you just trade 1 month. Over the 5 years, you can get roughly 4% return just by doing on trading on CIMB. Okay, so that is just a preliminary summary of what you can do during window dressing month. Okay, so this is December in 2013. It's 0.5% up. In 2012, let's check one more. 2012 is 2.1% up. It's the success rate is quite high. So you can use this kind of method in order for you to play along with it. December, it's up 4.2%. It's even better. So when you go back track for about 10 years, let's see, it's 2.3% in December 2010, and 2009, it's 1.6%. So out of the 10 years period, you can see that there are only 2 to 3 times it is losing money, and roughly you can get 15%. I would say 15 to 20% out of these 10 years, and 1 year is around 1.5% just trading 1 month itself. Okay, so if you have this kind of information, you are able to pinpoint to a very good trading strategy just by doing window dressing period. Yeah. So that is how I look into the situation right now in CIMB. So CIMB is the heavyweight, one of the picks that we pick for today, and the next one is LC Titan, but it didn't trigger us any signal, so it went almost to the daily high of 2nd December. It pulled back. So the next few companies you are going to look is Complete Logistic. Logistic company is a bit in the gray area. Some logistic company are making worse off. Some companies like Complete is making better off. So it's hard to gauge whether which companies are making better, but at least the trend of the trend of Complete Logistic is much promising right now. It's more promising, and it is still uptrend intact. And today it has triggered us around the breakout here, 249, 250 level. So there is a good 3% gain today. But I assume that right now it is challenging the previous high, and very likely it should break out towards above the 2 ring at 57 cents level. Okay, so before I go into further details, I think whoever want to ask your question or your stock picks, you can share our video. Make sure you have the sharer badge, and then like the video as well, and make sure you have the sharer badge, and we will review your stocks later on. So stay tuned until if you have any questions you want to ask me, you can put it in, then I will take the questions later on. Okay, if you have the sharer badge. So the other one is EPMB. This morning it tried to break out strongly above the 97.5. It went up to 101, then straight away flashed down to 92.2, 92 cents level. So what is the strategy right now here is, if there's a breakout, normally what we are doing is a breakout, then we take profit 2 to 3 ticks, because it is daily intraday movements, right? And if you're holding a longer period, yes, you may, but you also need to think about where to cut loss. Okay, so make sure if you have make sure you have to set your rules correctly before you trade it. So if you're entering above 97.5, 98 cents level, few ticks away, 101 is around 5 ticks, right? If I'm not mistaken, 98.5, 99, 99.5, 1, 101. Okay, so it's 5 ticks away. So 3 to 5 ticks, I think, is a very good range to take profit and pull back if it is falling below yesterday's lowest bar or the 30-minute on the 30-minute chart. I think it's fair to say you have to cut loss. Okay, so that is how it goes. With intraday trading, you can't do much. but you can always do a cut loss. And especially right now, if you notice the chances of winning is so low. Okay, why do I say it? It's because FBN small cap is down. It comprises of around 600 to 700 counters in the market. Okay, so which means that if this is falling, it's telling us that over the past few weeks it has been falling. Your chances of making good money is getting lesser and lesser. So you normally want to trade when it is on a on a high on the uptrend wave, and try not to trade when it is coming down. So I will, if you follow my course earlier on, we have this ADX indicator. I would tell you where is the strongest path, which is when ADX, the blue line is above the uh, green line is above the red line. This is the part whereby it is the strongest, and you should be only trading, or it will improve. It will improve your chances of winning if you are trading just within this range. But if not, you are using a simpler method is by using this, the crossing of just the blue line above the red line. That will tell you the start of the trend. Then the crossing below, yeah, I can't really draw it, but I can use this. This is the crossing upward, crossing downward, and crossing downward. So this part you have to take note that you have to avoid trading anymore. This part is to improve your trading more and more, gain a position, gain your exposure during this position. When it is falling, you should be taking your trades off. Okay, so this is also telling you that it is not good anymore here, and this is the top part. Okay, very top most position. Similar case here, we have this part here, and it is showing this part to enter and this part to exit. Okay, so this part to exit, you can see. Yeah, okay, then re-enter again here, then exit here. So if you are trading on small cap, or most of you are trading on small caps, make sure you are using something that is more scientific, that could help you to limit your losses. Like for instance here, if you are already knowing that this is already an uptrend, or sorry, the weaker trend is coming in, so it's here that you have to take the time off. Then you don't have to trade anything until this part of the day. So May until August, sell in May and go away, is somehow resembles that old adage. Okay, so you just come in here, trade here, come in here, trade here, and exit here. So if you notice that I have a course early on, or I think if I'm not mistaken, early this year, there is a ADX signal. You can actually go back, go look at it again, and see how does it help you. And if you want to re-look into that video, you may look into that and get more information. Okay, so anytime that it is crossing, this is a very typical pattern here. It crosses here, then it starts to rally. It crosses here on the negative side, it starts to trade slower. It crosses up here, the momentum started again, and it crosses here. So you are almost always correct, okay, in terms of your probability, in terms of getting the small cap index correct. So if you have this already in your hand, definitely you are going to avoid the month of from May until August. All right, May until August. Then you come back again August and September. Then you avoid straight away from November month onwards, which means that after budget, it basically tells you that it is no good anymore. You have to offload the shares. So that is the idea of FBM small cap. Okay, so I don't see any questions, but so I will go on into my our daily stock picking. Okay, Eno. Why did we pick Eno? Is because it is positive early on, and we did put in I think 2 trading days ago. I think on Wednesday or Thursday, and it has went up towards at least to retest the previous resistance. We are correct, and this is after the results August, and this is after the results, financial results here. So we thought that the CPO price can still sustain. We didn't know that Omicron is coming in, and therefore it has hit most of the commodity prices like CPO and also crude oil, and that's why it has hit us. But we think that Inno has a chance because it is a more promising counter in terms of their earnings. So earnings wise, they are okay. So if you want to trade on plantation counters, what you can do next round, just before the results, you might want to buy some good fundamentally solid companies because CPO prices are still strong, throughout these 2 months. Although it has fallen from 5,000 to 4,005, but they are at least selling at around 4,500 range over the past couple of months. And that is going to contribute to their earnings going forward. So if you want to trade on plantation counters, trade only ahead of the results and sell after the results. Okay, so that is the idea. But again, we are still anticipating a bullish move from this point. Especially right now, we have a good upward rally, pull back sideways, and then a breakout mode here, pull back and did not, violates below 125. I'm still anticipating 147 as the next target. Okay, so if you find the risk and reward ratio is good enough, decent enough, around maybe 128, then you can actually trade from 128 towards 147. I still believe that there is a very good chance that it should rally towards the next year's earnings. Okay, so another one is Eureka and Tafi. Eureka went up a bit by a few ticks as well. I think 2 to 3 ticks. Yeah, trading range is lowest point is 635, highest is 655, so it's around 2 cents, 4 ticks. So it's still positive. I am still anticipating further upside at least until the 67 towards the 69 cents level. So this is still encouraging move on Eureka. Okay, Tafi is the last one. Let's see what is the happening in Tafi. Okay, so this morning Tafi went up. It pulled back, then it recovers back again a bit. Check on the daily chart. Let's see. It is still it is oversold and it rebounded and it hits a target or resistance along the 246 level. I'm anticipating this to rebound higher at least towards the 264 level. So short term wise, I think there is still chance and support is located around 2 ringgit level. So trying to aim for a positive move in the near term on Tafi. Normally, when market is bad, Tafi, Eureka, Scanwolf, all these companies will, emerge in our screener. Okay, so that would be some stock picks for today. And let's see what questions do you have. Okay, there are a few questions before we end the briefing around 105. Sam Maiden and Pekat. Sam Maiden and Pekat is under the solar related companies, and we thought that it should generally stay well ahead of all these carbon neutral, all these policies of LSS and going forward. But we did not really see a strong movement yet. But there is a false breakout here and a pullback. So it's just unforeseen circumstances that it didn't really take off from the breakout of trend line on Sam Maiden above 120. We thought that it could actually, stage a very strong trend change and then recovers. But seems like the COVID impact and negative sentiment overall is still impacting them, affecting them in terms of their share price. But one thing good is that they have formed a double bottom formation, but it's still not too positive yet. If you want to trade, I think it will be risky. Your resistance is around 1 ringgit and 12 cents, 1 ringgit and 14 cents level. I don't see it as a very strong position, okay, for now. So I think more downside risk than upward potential for now. Pekat, similar case, we have IPO range bound around this level, 70.5 cents. It has pulled back towards 60 over cents level. I still expect, a further sell down phase in Pekat for the same reason. Omicron is coming in. Then it's still not decent to focus in solar related companies for the time being. Okay. So another question is on Gen M. Okay, Gen M. Okay, Gen M is So Genting Malaysia, it's under the recovery team, especially when you notice all this news out there related to Omicron or COVID-19 cases spiking in so many places. The share price will react negatively towards that. Firstly, so even gloves are down, even recovery team are down right now. So I shall see that maybe that could be an opportunity of a good range bound around 2 ringgit at 69, 2 ringgit at 76 level. But if Omicron worsen and we are unable to travel again, some places are under EMCO again, then perhaps these will continue to fall further. The trend right now is still not decent. Uh, I anticipate some downside risks still persist for the time being, and we shall not pick the bottom as of the time being. So I will only focus when it comes back towards the support range around 268 or even lower towards 255. Then we might want to take a look at it again for this Gen M. Okay, so what entry point and signals to look out for? So for the time being, yes, definitely it's oversold, but I will wait for another few more days to see how does it react around this zone. This is a support zone. We need to see how it react. Then after that, we need to see a trend change. The best is use indicators such as ADX. It will tell you pinpoint you the places to enter. This is a very good entry point. If you take note of this sell down phase, once there is a signal coming in on the crossing, that could be the phase to enter, and you can trade along with that. I believe that this is something similar to this sell down phase here and also here. So it should collapse into the same direction before going up higher. Okay, and especially June, I think after June, July, August, we have a Delta variant around this area here, or just before that, we have this Delta variant. But at least in local front, we have started to ease off in terms of the restrictions, and that's why there is a relief rally from 250 towards 320. Okay, so right now downside risk still persists. We need to monitor how does it react, and best is to use ADX signal to guide you in. Okay, another one, last counter will be MFLA. MFLA seems like still downside risk persists, but the negative sentiment seems like it's fading and may rebound. But it's if it's not giving you a good rebound mode or rebounding signal after a 2 weeks period, I think it is not as great. Okay, so just wait for the signals to come in. I think right now is still waiting for entry, but the downside risk is very limited. If you want to enter around this level, 60.61 cents level, and cut loss is around 58. So I think it's worthwhile to trade this 3 cents, and resistance is around the 65. That will be the resistance right now. I see that the rebound phase will also meet with a lot of selling pressure because it is in the downtrend cycle. Okay, so I guess that is about it. So in summary, I would say that you have to be cautious because of FBM small cap is undergoing a correction phase, and we have to use the ADX indicator to really pinpoint us where is the direction. If if the odds is not favorable to us, I think better off we shall trade lesser. But if it is turning into more positive tone, then maybe we want to move into a higher exposure kind of portfolio. Okay, so trade with cautious under this environment. I think people are shifting away from small cap and back into KL, the heavyweights for the time being because of the December month window dressing period. So that is just one good information for you to trade under this very dire situation. Okay, so I guess that's about it, and thank you so much for tuning in into our M Plus Wiz Pro highlights, weekly highlights, and we will see you again next week. Thank you so much.